I'm joined now by Ralph Silva, Director of Silva Research Network. Thanks very much for speaking to us.
Fine.
So what can we expect when HSBC finally does report its results later this morning?
Well, we are expecting about $10 billion in profits from this organization, but I think more important than that is that we're going to see the majority of that money coming from the investment banking components. And that's important from an investor perspective because we've never really seen HSBC as the prominent investment bank in the European theater. But what we have seen through the past 2.5 years is that they've taken that dominant position. In essence, they're becoming the Goldman Sachs of Europe in the investment banking arm.
Now, HSBC has been exposed, as we heard it in Jennifer Joney's report there, to the U.S. housing crisis. How much of a burden is the U.S. household division on its earnings?
I think the best way to say that is they're going to be making about $10 billion. They're going to be reporting about $10 billion. If they didn't have the U.S. assets, I think they'd be reporting very near $50 billion because that's how much of a drain it is. But HSBC has positioned themselves quite well. They're very well diversified. They can handle losses in the U.S. and still remain profitable, and that's a testament to the organization.
So when is the U.S. business going to pick up, do you think?
That's a good question. I say that at least 5 years before we start to see sustained profitability in the U.S. operations from a retail banking perspective, probably 3 years from an investment banking and corporate perspective. It's a long way out before we start making lots of money there.
So how would you compare HSBC's performance to that of its rivals, particularly Barclays?
I find it interesting that HSBC always seems to be under the radar. We don't really talk a lot about HSBC, but HSBC is arguably the best bank in the world right now. It is the best managed organization. It made decisions very early. It stuck to their decisions. They have solid management. They have a very well-diversified portfolio. I think it is probably, from an investor perspective, the safest bet also.
Now, despite what you say, are you at all expecting a cash call from HSBC? Is that something that markets should be concerned about? These reports we keep hearing about the possibility of HSBC asking for additional funding?
I think they will ask for that, but for a very positive reason. They're going to need the money because they want to buy more assets. One of the things I'm a little disappointed about HSBC is they haven't bought any retail assets, especially when retail was so depressed in price. I think they're going to get money, but I can't think of another bank that would have an easier route to getting additional funding than HSBC. It is a solid investment, and I think lots of people will be willing to put money in.
Now, you spoke about the importance of the Asia market
Yes.
to HSBC, and the CEO is going to be moving to Hong Kong. What is the significance of that? What can we read into that?
I think we're going to see more of this, and HSBC has the luxury of very easily moving people to Asia because they have a lot of assets there. But if it becomes very difficult to do business in the United Kingdom, that's exactly what a lot of other banks are going to do as well. I think this is the first of many defections to the East from senior management in the UK.
Looking ahead, you just said that HSBC, it's getting a lot of its profits, or we're expecting a lot of the profits to come from the investment banking unit, that this area of the business is performing extremely well, and that from what you're saying, HSBC is going to be on a par with Goldman Sachs. What is the outlook for the company?
Well, I think the outlook for the company is more of a mix. I think they've done a great job in the investment banking and in the corporate environment as a whole. But what I think they have to focus on in the next year and a half is the retail banking component to keep their diversification up. They're generating slightly too much money from their investment arms instead of the retail. I'd be much happier if it were more of a 50-50 split, which right now it isn't.
And how difficult is that going to be to sustain that diversification, if you like?
It's very difficult in the current environment, but the management is very experienced in this. They take a very long-term view. They haven't looked at this in a 3-month period. A lot of the other banks have looked at this problem 3 months, 3 months, and 3 months. HSBC's looked at this in year terms, and I think that they're very well positioned because of that.